It was a rough year for AMC shares. They were down 85% to wrap up 2022. CEO Adam Aron is wasting no time fighting back against critics. Well, he always kind of does. He's coming out swinging on Twitter over the weekend. The Twitter storm caught the attention of our Brian Sazi, and that's where we find his take today. Last week, of course, he said he was not going to take a cash salary, right, this year.
I love this stuff. And this tweet, look, Adam's catching a lot of heat. AMC shares have been under pressure, but I just giggled at this one. See,
I love that you're on a first name basis with him. You always refer to him as Adam.
Actually, it's AA. It's just, it is.
Double A.
It is what it is. Yeah. But anyway, let me just read this tweet, okay? I don't want to give you too much insight into what I, may or may not be texting. So Adam Aron, or AA in this case, so much garbage info spreading about AMC by twisted conspiracy theorists. This is a very aggressive tweet by Adam Aron. Not something I've normally seen by him. He's always an aggressive tweeter, but this, I think, ratchets up the pressure on whoever he thinks is attacking AMC shares. Unclear. I think he might be referencing people on social media and Reddit, but to me, unclear. I can't imagine institutional investors who's referring to them as conspiracy theorists. But nonetheless, let me walk through the rest of this and why you've seen AMC shares.
Are there institutional investors in AMC shares?
Yes, yes. This
teasing.
is just entirely owned by retail, Julie. All right, so let me go run through this here. You've seen AMC shares down 85% last year. The box office was, of course, weak. Cineworld bankruptcy, that hurt investor sentiment. And to that point, also got a report this morning that Cineworld is not in talks with AMC for AMC to buy some of its assets. Of course, Cineworld, again, going bankrupt in September of last year. And of course, concerns on AMC diluting existing shareholders with new transactions has taken a lot of different, made a lot of different moves to raise cash and reduce leverage on its balance sheet. But this year, there is hope or projections that maybe the box office gets a little bit better with some key movies coming out. Last year, Comscore projects that the U.S. box office hauled in $7.2 billion. That's down from $11 billion. Adam mentioned in his tweet from 2019. That's, of course, pre-pandemic. But this year, you have the folks at Comscore telling Yahoo Finance last week, this year will be having more movies in terms of quantity. Year-over-year, that should be good for movie theaters. And this year we'll have more potential blockbusters on the docket, Creed 3 and Indiana Jones 297. And then also 2023 likely be better just optically versus last year. Now, given all of this, you have to think this year is marginally better at the bare minimum for an AMC, just given how weak things were last year. But I do expect more financing transactions from this company. They have to have a lot of leverage on that balance sheet. They have to free up that so they can ultimately show some better profits, better cash flow as the theater comes back.
I don't know. They were trying to throw some haymakers this year in terms of the box office and the movie industry. You had everything from Marvel to, of course, you had DC Comics with Batman out early on in the year, and then earlier in the year, Top Gun as well. And then, of course, Avatar entered the equation, which was lackluster at the blockbuster kind of events that they were hoping for. So it is a large question of what titles will be the ones to actually get people back in the theater experience, especially if they're crunching some of their own numbers and their own spending on that.
And too, you talked about a lot, Brad. It is expensive going to the movies. And Julia, you're trying to go bowling over the holidays.
Also expensive.
$300 trip. It's trip to go out. It is expensive to go out and get some of these experiences that have always been somewhat kind of affordable. Now they're just unattainable for many families.
By the way, that rally didn't last long. Stocks are all down now.
My gosh. All right. My fault, guys.